What's going on, guys? Jeff here from Livestream Trading. In today's video, just a quick tip video, about 5 minutes, explain to you why I use this rule. I call it the first 15-minute rule, and how it saves me and a lot of our students a lot of money when it comes to that opening session. So do you find that in the first 15 minutes, the stock is a little bit erratic, right? Something's gapping up. In this case today, we're looking at PHCF. This is Monday morning, pre-market. A typical open for a stock like this might be something like this. It has sort of a rush of buyers at the open, and then it comes all the way back down. And then, often we'll see it then correct again. And it's sort of that first 15 to 20 minutes where the stock really hasn't established any trend, but you clearly have a lot of people trading it. There's a lot of opening volume on these types of stocks, but often the trend isn't developed yet. So what you kind of get is you get guys that chase the open, hoping for an opening run, then they get stopped out under pre-market support, and then shorts kind of get in there, chasing it down through lows, and then they get stopped out on the way back up. And basically it's kind of a mess. And while I do think there are ways to make money in that first 15 to 20 minutes, particularly maybe with scalping strategy, something that's really helped me and a lot of our students is just really implementing what I call the first 15-minute rule, which essentially just allows you to wait for the stock to clearly establish after the open a high and a low or support, and then wait for an actual setup to form on the chart to indicate the next move higher. And this is going to be helpful for a few reasons. One is because in the morning it can be hard to judge where you should put your stop right at the open. For example, you don't want to buy, let's say, this break of 390 right at the open only for it to come back 5 minutes later and break these pre-market lows, right? And that's a huge wide stop right there if you're taking a 390 entry risking 330. At the same time, you don't want to chase into weakness ever, especially in this market. Is disastrous for shorts to short into weakness. You always want to wait. So here's a couple of scenarios where, we'll look at what could possibly be a first 15 or 20 minute long scenario and a short scenario. So let's say the stock, for example, has an opening push, pulls back, holds a higher low here over 375, reclaims 390, holds a higher low, and then starts to curl to break out through highs. Okay, so in this scenario, by waiting the first 15 minutes, we didn't find ourselves chasing the open and then getting emotional, perhaps even reducing our position or starting to take a loss early, pulling back on this pull, because we don't know where the higher low is going to come in yet. The only support that we have so far in pre-market on this stock is 330. And I think that buying 390, risking 330 is too wide a risk too early before trends developed in the stock. So let's say the stock opens, pushes to 425, pulls back, holds 375. Pushes back up towards 10 a.m. We get a little bit of a lower high around 415, and now we have a higher low forming at 390. Now we have a scenario here where the stock has shown us where the high is, where the higher low is, where the lower high is. We have established some support at 390, and it's now offering us an opportunity to potentially buy this breakout, just say around 410, risking 20 cents. And this is a position where you've put yourself in where the stock now has a very good chance of breaking those morning highs and reaching targets up in these areas here. So what you've done essentially is you've mitigated your risk drastically by waiting for the stock to actually give what would be called a setup. The red shaded area here might represent the risk that you're taking. So from the entry point to where the stop loss would be under the 389 support. And the green area then could illustrate the potential reward. And in some cases, of course, let's say, for example, the break of pre-market highs can offer you really good risk versus reward in a scenario like this. But the really big point here is that by waiting for the stock to establish a trend and to let you know where the support is after that morning fire has kind of died down after the first 15 to 30 minutes, it then can offer you a good indication of where the chart is going to go next and a better risk reward scenario for entering that trade. Let's take a look at the opposite, the short side now. So for example, we don't know, I don't like to assume a stock is a long or a short bias until the chart indicates to me which way it's going. So let's say that in this case, similar, stock opens kind of strong, pulls back, sort of fails to get back over that 390 resistance in pre-market, tries once, kind of fails, and then we end up with something like this. Okay, now I can be fairly confident with this chart. It's tried once to get over resistance in VWAP, failed, tried a second time, failed. I might find a spot, maybe somewhere right in here, that offers a low risk short signal, or over here, And at this point, the trend has been established. The buyers have tried a couple of times to get control of this over VWAP in 390, and they've failed to do so. So here's two potential areas that I could enter in this trade, both around 10:30 or even closer to 11 a.m. And I can avoid all of this opening chop where nothing really significant happened. But let's take a look at the risk reward scenario in this case. So if I end up with the short, let's say in this case 375, risking 390, only risking about 15 cents per share there, and the potential reward hypothetically could be the stock making new lows that day. It could just be, in this case, maybe it's only just testing the pre-market low, which is still 3-to-1 risk reward or more, but there's a lot of potential there. And the risk, again, is minimal, but the chart has established that it can't move higher, and it's given us an entry point with a clear stop loss area and continue the trend lower. In the second scenario here, maybe not as good of an entry, but maybe a little more confirmed over here, where the stop might be 375 and the entry might be 350, a little bit lower risk reward, but it's had a couple good attempts to break through highs. It's had a couple good attempts to get back over VWAP and support. It couldn't do that. So this is the quick tip of the day, guys. I'm going to be including maybe 1 or 2 of these per week just to help get you guys on the right side of trades in the morning. Other things that I can think of, I'll definitely be adding as well. Feel free to check out our website at livestreamtrading.com if you want to trade live with me daily. I walk through setups and trades like this every day, drawing on the charts, explaining what I'm looking at, what I'm seeing, and giving some really deep insights on what I've learned in 15 years of trading. So that is the first 15-minute rule. If you enjoyed today's video lesson, guys, please like and subscribe, and I promise I'll make more content like this for you in the future. All right, guys, good luck today. Have a great week, and we'll see you next time.